In today's video, I want to share with you an exciting and promising small stock that has recently taken off and I think has plenty more room to run here. It's in an industry with some major catalysts on the horizon that could unlock significant value for shareholders soon. It's been one of my best investments recently and the business is performing very well, having recently beat earnings expectations. The presentation I'm about to show you, I actually made it a little over 4 months ago, back in early November, down here when the stock was trading under $13 a share, and I actually sold it as a special presentation. Some of you may actually remember this, and as I promised back then, out of respect for people who purchased this special presentation, I would only share it publicly once the stock had gone up 50%. Well, as of the last trading day, Thursday the 28th of March, the stock has traded up 50% since I first made this special presentation and sold it. However, I still think it's early days, and my fair value for the stock still has it around $30 a share, which is another 50% higher than where it's currently trading now. The management of this stock are highly qualified and heavily invested in this business, and it also pays a solid quarterly dividend with an annual yield above 8%, making for a great compounding machine, of which I'll show you how that works later on in this video. And if you'd like to know how I uncovered this stock and opportunity, then click the link below this video and check out my Easter special, which expires today in just a few hours from now. You can get my online course with over 12 hours of content split up into 25 modules, covering everything from how markets work, financial markets history, all the famous bubbles and crashes, a few modules on how to best grow and protect your wealth, deep dive into technical analysis, fundamental analysis, and in the course you want to pay attention to Module 10, Valuation Analysis of Stocks, along with Module 20 called Hidden Bargains, as the strategies I teach in these two online modules are how I found this little profitable stock trading well below its intrinsic value, for which it still is today. My Easter special not only gets you lifetime access to my online course, but also lifetime access to my 25 personal custom trading view indicators I've made over the last 5 years. And these are really unique indicators you won't find anywhere else online. And with these indicators, you want to pay attention to stock fair value, business quality score, and shareholder yield, along with using the TradingView stock screener, all of which I teach within the course on how to find quality small stocks trading well below their fair value. That's literally how I found this stock, as it stuck out to me on my indicators as I was going through a screen for it being a high quality stock that was undervalued. And once I dug deeper into it, everything I uncovered validated my fundamental indicators and gave me conviction to pull the trigger on making the investment, all of which you're about to learn in this video. So this is a little bit of a longer video. However, I think you'll find a lot of value in it. And please keep in mind, this presentation was made on the 5th of November. Also, this isn't some cherry-picked example of mine. This is the only paid special presentation I've ever done that I'm about to share with you now. And make sure you stay to the end of this video, because after this presentation, I'm going to give you a fresh update on this stock, along with the latest fundamentals, news, technical analysis, and industry updates based on all the latest data that we have available. So I'm going to go ahead and play this special presentation for you now. I think you'll find a lot of value in it, as all the information and analysis I present is still relevant today. And just as a reminder, if you want to get lifetime access to my online course and 25 custom indicators for TradingView, then click the link below this video, head on over to my website, clickcapital.io, and you can get lifetime access to both for the one-time payment of $339 today. There's no ongoing costs, and that comes with a 7-day money-back guarantee in case you change your mind. Here's a special presentation on this stock, and I think you'll find a lot of value in it, as the information and analysis I present in it is still all relevant today. So without any further ado, here you go. I hope you enjoy. Hey there, and welcome to this Click Capital special presentation. My name's Jared Mann. I'm the founder of Click Capital, and this is my investment report and deep dive into what I think is a unique opportunity. And so I'm going to present to you my thesis on my latest investment into my own personal long-term portfolio. The stock I'm about to mention, I've currently got 12% of my personal long-term portfolio invested in it, and I plan on staying invested in it for a while longer, as I think it's got great potential and it's currently undervalued. I'm going to get into all of that plus more. And so first I just want to say thank you very much for buying this special presentation and listening to my research. I hope you enjoy it and find a lot of value in it. But before we go further, I'm legally required to read out this financial disclaimer to you, and that this presentation is not financial advice. It's for entertainment purposes only. I, Jared Mann, and Click Capital are not licensed financial advisors. I'm not making any suggestion or recommendation to buy or invest in any security. I'm only sharing my research into an investment I've recently made. All information should be considered my opinion only, and may contain forward-looking statements that may not materialize as mentioned. Trading and investing in any security carries significant risks of losing capital. Please do your own research and always trade at your own risk. I own shares in the mentioned security in this presentation, and by continuing with this presentation, you agree to this disclaimer. Alright, now we got that legal stuff out of the way. Let's dive right into it. And first, just a bit about what I'll cover in this presentation. First, I'm going to introduce you to the stock, what they do, their financials and valuation. We'll also look at management and perform some technical analysis as well. I'm going to talk to you about the industry and risks. I'm going to give you an overview on the industry they operate in, the potential opportunities and risks going forward. And then finally, I'm going to give you my investment plan. I'll outline my investment plan in regards to this stock. I'll explain what I think fair value is, how long I may hold it, and when I may add or reduce it. And as part of your purchase of this presentation, I'm also going to keep you updated going forward with periodic emails to keep you updated how the company and industry is progressing and my investment in it as well. Whenever I may buy or sell and finally exit the investment, I'm going to let you know all that as well. So for months and potentially years going forward, I'm going to keep you updated on this stock industry and my investment in it. So before I tell you what stock I've recently invested in and this presentation is about, let me first just talk about the industry that they are in, and that is cannabis. It's an industry I've been following closely for a few years now. Ever since we first started seeing a lot of listings coming on back in 2018 and it really took off, I've been following it, and I'm actually a medical cannabis patient myself. I use it to help me sleep, as I used to suffer from insomnia and struggling to stay asleep after I got to sleep. I'd often wake up in the middle of the night and couldn't get back to sleep. However, cannabis really helps me sleep, and with pretty much no side effects either. And I know it's not for everyone. You may have different experiences with it than me, but please, I just encourage you to keep an open mind, and I'll show you a little bit more about the data and facts behind cannabis and why it does deserve a place in society. And why I've called this slide the re-emerging cannabis industry is because for the last 100 years, it's pretty much been shut down by governments, of course. However, in recent years, it's starting to climb back out of those dark depths. And that was kicked off by the legalization of recreational use of cannabis in Colorado in 2012 and national legalization in Canada in 2018. And now the industry is expected to reach $100 billion in sales by 2028 with a compounded annual growth rate north of 15%. And we've already got over 50 countries that have legalized medical cannabis already. And just to give you a bit of a historical context of the timeline of significant cannabis legalization progress, it was all kicked off in the mid-70s in Amsterdam, who decriminalized cannabis and allowed for its sale and consumption in those so-called coffee shops, which I'm sure a few of you have been to and seen for yourself. And then pretty much nothing happened for 20 years. Then in the mid-90s, California became the first US state to legalize medical cannabis through Proposition 215. Then in 2012, we saw Colorado and Washington State become the first US states to legalize recreational cannabis. In 2013, the country Uruguay became the first to fully legalize the production, sale and consumption. In 2015, Canada's Liberal Party promised to legalize recreational cannabis, which they did in 2018. In 2016, we saw several more US states, including California, Nevada, Maine, and Massachusetts, legalize recreational, along with countries like Australia and Germany legalizing medical cannabis, as did South Korea in 2018. Mexico's Supreme Court declares the prohibition of recreational use of cannabis unconstitutional. 2019, Luxembourg announces plans to become the first country in the European Union to legalize the production and consumption, as does Thailand, being the first Southeast Asian country. Then in 2020, we saw United Nations Commission on Narcotic Drugs votes to remove cannabis from Schedule 4 and recognized its medical value. Then in 2021, we've seen more US states legalize recreational use, and so the path of legalization continues to trend in the right direction. And that's because there are real benefits of cannabis to society. It's a plant that's been known and used by humans for over 5,000 years. It has many uses and applications, and like I said, the last 100 years you could kind of think of it as the dark ages of cannabis, where it was outlawed, a really big negative public stigma that still exists today, and that was born out of false science and other cultural stigmas from the 1930s. But that's laying fertile ground for what I think could be the cannabis revolution over the next 25 years and a big resurgence. And it is much a healthier alternative to alcohol and tobacco. Unlike those two products, cannabis has never killed anyone, when alcohol and tobacco takes lives and ruins families every day. And with the regulation of cannabis and being legitimized as part of society, that can help create new businesses, jobs, and taxes for the community. And we've already seen a number of proven benefits from cannabis legalization so far. The first being economic boost. Colorado's already reported over $1 billion in total state revenue from the legalized cannabis industry since its inception in 2014. The industry has already created over 300,000 jobs. It leads to a reduction in opioid overdoses, which is a huge problem around the world. And a study published in the journal JAMA Internal Medicine in 2014 found that states with medical cannabis laws had a 24.8% lower mean annual opioid overdose mortality rate compared to states without such laws. It's been shown to give a drop in crime rates, actually leads to a decrease in youth usage, a reduction in traffic fatalities, savings for law enforcement, tourism boost, and consumer safety and public health benefits, because regardless whether it's legal or not, people are still going to use it. So we might as well regulate it and help create a clean industry and product, and just come to terms with the fact that the war on drugs for the last 50 years has been an ultimate failure, a huge waste of money, destroying a lot of lives and communities, and cannabis has been at the heart of all that. And the reason why humans have used cannabis for over 5,000 years is it has so many applications, not just recreationally and relaxing and being with friends, but also as medication, cooking oil, the medical benefits of CBD. You can get a lot of extracts from the plants, and scientists are only just really diving in to all the potential benefits that cannabinoids offer. It has a lot of animal uses and seeds, stalks, and societies have used it for fabric, paper, rope for hundreds of years, and it can be even used for bioplastics and even as an alternative to concrete. It's also one of the most fastest growing robust plants that can be kind of grown anywhere in the world, with some saying it's the most important #1 plant to ever exist on Earth, and we're yet as a society to fully realize its potential and benefits to a lot of us. Even the first US president, George Washington, over 220 years ago, recognized the value of cannabis, used to grow it himself, and even said, make the most you can of the Indian hemp seed and sow it everywhere. Same again with the third president of the US, Thomas Jefferson, in the early 1800s, said hemp is one of the greatest, most important substances of our nation, and is even rumored to have said, some of my finest hours have been spent on my back veranda smoking hemp and observing as far as my eye can see. So the founding fathers of the United States could see all the way back then the value of cannabis a lot better than current day leaders can. Although current day US President Joe Biden did make a campaign promise that he would legalize cannabis, and has even said things like, too many lives have been upended because of our failed approach to marijuana. It's time that we right these wrongs. So hopefully he does come good on his campaign promise and legalize cannabis and allow the industry to grow and flourish as it should. So the path to legalization around the world is growing and growing, and I would say it's almost inevitable. It's not a matter of if, it's more a question of when. And when the US does legalize cannabis federally, a lot of other countries should follow suit. And the projections for global cannabis revenue is to grow at an annual compounded rate north of 15%. And before the end of the decade, it should generate global sales in excess of $100 billion, with the largest category being recreational, the second largest being therapeutic, and the third largest being medical. Okay, now that I've given you a little bit of a background on the cannabis industry, the plant itself, and where we're likely going with it all, I want to let you know the stock I've recently invested into, and that is New Lake Capital Partners, under the ticker NLCP, and they're actually a real estate investment trust that is 100% focused on the cannabis industry, and they own 32 properties across 12 states in America that they lease out to cannabis cultivators and retail dispensaries. So this is kind of a different way to play the cannabis industry, as opposed to the actual producers and retailers themselves, who are struggling a lot in the current legal climate that's been significantly affecting their share prices and businesses. However, I see New Lake, in my opinion, as being the safest way to play this industry, and I'll show you why. But before we go on, for those of you who don't know, what is a REIT? Let me just first explain that a little bit. So a real estate investment trust trades on the stock market just like a stock, and in my opinion it's an efficient way to own real estate versus directly owning property. And the legal requirements of a REIT is that they must distribute at least 90% of their income to shareholders. REITs are often viewed as a solid passive form of income, and as many of you probably already know, REITs have been hit pretty hard this year due to increasing interest rates. And New Lake Capital Partners trades on the over-the-counter market on the first tier. So there's 3 tiers in the OTC market. First tier is like really high quality companies, a lot of the large companies from around the world, Tencent, Heineken, BHP, a bunch of others. Then you've got the second level, which is a bit smaller again, less liquidity, minimal reporting requirements. Then you've got the third level, kind of the really bottom of the stock market, the pink sheets, they don't have to report, and there's a lot of scams and dodgy stuff going on in there. And don't get me wrong, the OTC market, penny stocks are really risky. However, I'm going to show you why this one's different. They're actually profitable, pay a healthy dividend, and therein lies the opportunity for them to get uplisted to the main exchange like the Nasdaq and unlock a lot of value, because then large institutional investors can invest in it, which they can't already. And and that's why we've got a suppressed valuation. So just some highlights of New Lake. They've got an experienced team with a track record of strong corporate governance and delivering returns for investors. They've got the scale and early mover advantage. They have a really high quality portfolio of properties with significant duration and above market yields. They have a solid financial position with a lot of flexibility, and they're in a high growth industry and serve as an important capital partner for the players in the cannabis industry. And every year we're seeing growth in the amount of states legalizing medical and recreational. We've now got 83% of the US population residing in medical markets, 48% residing in adult use or recreational markets, and we've got 88% of the US population supports adult use and or medical cannabis. So the people as a whole are way in front of the politicians and leaders who are a lot behind on this issue. And we'll talk a bit more about that later on. But we can see here shaded in the dark blue is adult use and medical. The light blue is medical only, and the grey states still completely illegal. Next I want to talk about New Lake management, who are very impressive. That's led by Anthony Caniglio, the CEO, who comes from an investment banking background. He worked for JP Morgan for 14 years, and prior to his job at New Lake, he was a CEO of Primary Capital Mortgage, a residential mortgage company, and successfully exited to BlackRock. Also got Lisa Myers, the CFO, and she was previously president and CFO of Western Asset Mortgage Capital Corporation, and they were NYSE listed REIT. And looking out to the senior VP, he's also got experience in cannabis REIT, commercial real estate transactions. We've got Gordon Dugan, the chairman. He's also on the board of 3 other listed REITs. And looking across the rest of the board, they're all very competent and qualified with plenty of industry experience. And what I like most is they've got their money where their mouths are. And this is not common for many stocks. You'll see some CEOs and directors, they'll own a little bit of stock, but here we've got Anthony, the CEO, who even at depressed valuation levels still has over $7 million in stock. That's 2.5% of the company. Then the rest of the board is very well invested as well, with the president having over $500,000 and 3 other directors having over $1 million invested. And so overall, the board and management is well invested in the stock with their interests strongly aligned with shareholders. And they are very transparent about everything they do. They've got a really good website, newlake.com, and investor relations section as well. They're regularly posting news and press releases. And you can search YouTube for Anthony Caniglio, the CEO of New Lake, and you'll see him regularly turn up on lots of different podcasts, industry conferences, interviews, and that's something I really like and appreciate as well. Shows he's got nothing to hide, and he's actively out there promoting the business and stock and trying to get more exposure to investors out there. And you can also search on YouTube the name of the company, New Lake Capital Partners, and you'll also see them show up around the place as well. And I've listened to a lot of them, and they're really transparent, make a lot of sense. And at the end of this presentation, I'll include what I think is the best interview with Anthony, where he articulates really well the business and the position they're in and why it's a good opportunity. So stay to the end of this presentation to watch that one. But let's first take a look at the property portfolio of New Lake. And so they own 32 properties across 12 states, with about half cultivation, which are special design properties for cannabis cultivations, and retail dispensaries. They're all 100% leased, and they've helped a lot of their tenants free up liquidity without diluting ownership by doing sale to leaseback transactions, where they'll buy the property off the tenant and allow them to stay in there and lease it back to them. And they focus on limited license jurisdictions, so strong regulations protecting them. The license is linked to the vendor and that property, and they've got some of the biggest operators in the industry as tenants, including Curaleaf, Cresco, Revolutionary Clinics, True Relieve, Columbia Care, and so on. So a very diverse portfolio with some big stable operators in there. And New Lake's been operating for about 4 years, and they've almost collected 100% of the rent due to them in that time. Just recently being Revolutionary Clinics, they were unable to pay rent the last couple of quarters due to some operational issues and opening new facilities. And we just got news out from New Lake themselves on their site a few days ago that they've just worked out a deal with Revolutionary, entered into a new lease amendment and forbearance agreement. They've recovered a portion of unpaid rent from the security deposit Revolutionary initially paid. They've extended the lease term by 5 years, reduced future monthly rental payments, and received up to 9.95% of equity and Rev Clinics in the form of warrants. So they've worked out a deal that kind of works for both of them and going to keep them in there. And like I said, up until this, they had collected 100% of their rent due. However, this is still a risk for New Lake, and I'll talk about that a bit later on. But so far, they've done really good on collecting rent from their tenants in a time when the industry's been facing a lot of hardships, lack of capital, high taxing, and largely having to operate on a cash basis. And as you'll hear from the CEO at the end of this presentation, He's done a really good job in making sure he's getting the right tenant into the right property. Like I said, they put an emphasis on limited license jurisdictions, which limits the amount of competition that they can have. 64% of their tenants are publicly listed, and they really look at their cash flows with a conservative underwriting process because they want to make sure that the tenant's going to be able to fulfill a 15 to 20 year lease and be around and succeed in the long term. So that's their property portfolio. Let's move on to financial and valuation analysis. So to start off with a bit of a summary, they've got a strong balance sheet, very low debt, almost no debt. Their earnings are growing. Like I said, they've almost collected 100% of the rent due over the last 4 years. They've got low admin expenses, well-covered dividend payments, and like I'm about to show you, they're trading below tangible book value. And here's another look at their numbers. All their properties are 100% leased. They've raised with the IPO and a small amount of borrowings, $427 million, which they've deployed all of. They have a strong adjusted funds from operations payout ratio of 85%, 32 properties across 12 states with a total of 1.7 million in square feet, a huge average weighted yield of 12.2% with 2.7% in annual rent escalations, super low debt to earnings, 90 million in available credit, really long duration of 14.5 years remaining in the weighted average leases, a low general and admin expenses of 1.4%, and we just saw 11% year-over-year dividend growth. Here's another look at their numbers. In revenue, 12 million in 2020, and so far this year, we're coming in at an annualized rate of 46 million. Admin expenses are holding low at 1.4, and the dividend has been growing as well. The last 4 quarters, they paid out 39 cents a share in dividends, which at the current stock price of $12.80 works out to be a huge 12.2% dividend yield. They got 41 million cash on the books, only 2 million in debt. The market cap's around 270 million. And just to work out the net value per share, if you look at the capital they've invested, 427 million, assuming the property's still worth that or get back to that worth, minus their 2 million in debt, leaves us 425 million in shareholder equity. And if we take 425 million and divide that by the amount of shares outstanding, 21,302,515 shares, that works out to $19.95 in net value per share. And the current share price is at $12.80. So in my opinion, it's trading well below net value, up at $19.95 a share. And according to my stock fair value indicator, which doesn't just look at net assets, also looks at future growth projections, that's got fair value just under $50 a share. So if we were just to get back to net value, that would be approximately a 55% gain. And if it went up to the level of what my stock fair value indicator says, that's more closer to a 286% gain. So in my opinion, it's significantly undervalued. And there's a few reasons for that. First, just zooming out to a 3-day chart, just so we can see from when it IPO'd back in August 2021. And if I overlay this chart with the ETF IYR, the US REIT ETF, we can see it's pretty much closely followed that path as well. And so as you may know, REITs have been smashed down the last couple of years as we've seen interest rates rise, and the higher interest rates go, typically the lower REITs go in order to have a competitive yield. Also, if I overlay this chart with the ETF MSOS, Cannabis ETF, cannabis companies, you can see New Lake's followed a similar path as well. And as you may also know, cannabis shares have been smashed down the last couple of years as well, as hopes of federal legalization haven't come to fruition over the last couple of years as many had hoped. Also, since New Lake is on the over-the-counter market, large institutional investors aren't allowed to invest into it, and that leads to suppressed valuations as well. So we currently got a market cap of $272 billion, the dividend yield of 12.2%. Even if they had a bit more problems with collecting rent from some other tenants, they would still have a really high dividend. And this is why I think it's a bit of an asymmetrical bet. I think there's a lot more upside than there is downside over the coming year or two, especially if, and hopefully, the Biden administration legalizes cannabis on the federal level. That'll have a huge impact on the cannabis sector as a whole. So there are some potential positive developments for New Lake and the cannabis industry. We recently saw a recommendation from the Human Health Department to the DEA to reschedule cannabis from its current Schedule 1 level, which is the same category as heroin, to Schedule 3. And that should help pave the way for federal legalization. Also going through Congress at the moment is a Safer Banking Act, which will give permissions to banks to deal with the cannabis companies so they can stop operating in cash. They also won't have to abide by the 2080E tax law that restricts them from claiming business expenses, another huge disadvantage for the cannabis industry at the moment. Apart from that, just looking at New Lake, they're actually recognize their shares are undervalued themselves, and they're using their spare cash to buy back their own stock. And if we see some federal legalization, that should also pave the way for New Lake to uplist to the NASDAQ. And that'll allow institutional investors to be able to invest in the stock, and that should lead to a really material revaluation. And also, if interest rates have topped, then that'll also provide a tailwind to all REITs like New Lake, as their current dividend yields will become a lot more attractive versus that of bond yields. And just looking at the ownership of New Lake at the moment, you can see institutions only have 17.7% of the stock. Compare that to most listed REITs, which is around 70-80% or higher. We can see here in the top shareholders that it's mostly family offices, small hedge funds, and the board of directors and management themselves, with the CEO, Anthony, coming in as the 5th largest owner of the stock, and he's got over 500,000 shares. And the rest of the board shows up there as well. But don't get me wrong, just like in life, there is no guarantees in investing either. This is not a sure thing, and there's still plenty of risks and challenges facing the cannabis industry, namely our leaders, who most of them view it differently and are much more incentivized in other ways compared to the 88% of the public who want it legalized. That's because a lot of them don't want to go against a lot of their big corporate sponsors, big pharma, who feel very threatened by cannabis, especially against their pain management business. And because of that, the industry as a whole has faced a severe lack of capital, high taxes, depressed valuations, still battling with the illegal market for cannabis, and of course the long-held negative stigma around the plant which still exists today. And just to give you an idea of what the industry has been up against, here's a tweet I saved from Peter Grinspoon. He's a primary care doctor and cannabis specialist at Harvard Medicine, and he shows here a list of who's bankrolling the anti-cannabis legalization movement. And we can see some pharmaceutical companies, ones like Pfizer, Johnson & Johnson, Goldman Sachs, and also Purdue Pharma, who helped create and immensely profited from the opioid crisis. They don't want cannabis legalized because it threatens their pain management businesses, as cannabis has been proven to be a safe and effective treatment for many conditions and pain. So it'll be very hard for the industry to succeed and flourish if the politicians continue to ignore the science, data, and will of the American people and not legalize it in a timely manner. And that could lead to more issues with rent collection if more tenants can't pay rent. Of course, if interest rates keep climbing up, that's going to negatively affect all REITs, as REITs compete with the safety of government bonds for yield-seeking investors. And if New Lake are unable to uplist to the Nasdaq in the coming years and can only remain on the OTC, that's not going to help them attract a premium valuation either. So let me make it clear, this is not guaranteed. We are relying on politicians to do the right thing, and that, as many of you know, is really risky. And just like any other REIT or investment, there are still significant risks out there. Just taking a look at competition to New Lake, they're pretty much number 2 in the industry. There's only really one other listed one, and that's Innovative Industrial Properties. They're a REIT actually listed on the NYSE, focused in cannabis, and they managed to sneak through the back door a couple of years ago by changing their model, and they were just allowed to kind of stay on there. And that's something New Lake has kind of been trying to challenge, why they're allowed on to the NYSE and they're not. But their stock price too has been hit really hard, coming down from $290 a share in late 21, currently sitting just over $80 a share. But my stock fair value indicator says that REIT is undervalued as well. They've currently got a dividend yield just under 9%, with a market cap of $2.2 billion, which is almost 10 times the size of New Lake's market cap. So they are by far the number 1 player in the cannabis REIT sector, but there's no real 3rd or 4th listed players out there. It's just mostly privately held properties. Now you might also think, if SAFE Banking Act does go through, that allows the big banks and normal REITs to then deal with the cannabis industry. They could become competitors to what New Lake has got. However, New Lake are specialized in cannabis. They've focused their model on that. The properties they have acquired at it are in limited license jurisdictions, which should remain the same. And a lot of their tenants are locked into 15, 20-year leases. So Safer Banking Act and legalization will be a net positive for New Lake. And that should also help squash the illegal market for cannabis as well, which is currently still a big challenge for the industry, as the illegal market doesn't have to pay high taxes that the current legal operators do. And as I make this video, the Safer Banking Act is trying to make its way through Congress, and this could change a lot in the coming days and weeks, something I'm keeping an eye on. But currently, as it stands, as I record this video on the 5th of November 2023, the GovTrack website has got a 68% chance of the Safer Banking Act bill being enacted. So it's still almost a 50-50 of whether this goes through. The other big thing is whether the DEA is going to reschedule it. And if those two things would happen, that should pave the way for President Biden to sign in federal legalization as he promised in his campaign, and hopefully that happens before the federal election in November 2024. Okay, now that I've given you a bit of an overview of the cannabis industry, where it stands, some fundamental analysis on New Lake, let's dive into the charts and perform some technical analysis. First, let me give you a little bit of a summary. So New Lake IPO'd onto the market for the first time in August 2021 at $28 a share, right towards the end of the bull market, in which it reached a high of $35.50 in October 21. As with a lot of cannabis companies and REITs, it's got sold off really hard the last 2 years. We bottomed at $11.80 a few months ago back in June. We've been pretty much trading sideways. There is signs of accumulation and pretty good liquidity for an OTC stock. On average, it trades around 30,000 shares a day, which is about $350,000 worth. Okay, so just looking at the weekly chart of New Lake here. There we are in August 2021, coming onto the market for the first time. Traded up for 2 months, getting up to $35.50. Then it was pretty much all the way down from there. Bounced a little bit in September last year up till February, and then it's going down to the daily chart. We can see with that regional banking crisis in March really came off hard, as did the REIT sector. And if I just overlay the REIT ETF IYR, you can see at that time there's a really close correlation between NewLake and IYR. They both came off really hard in that March period. However, just looking in the last couple of months, the correlation hasn't been all that strong with IYR and NewLake. Instead, it's been a bit more closer with the Cannabis ETF, MSOS. And on that news back in late August of the health department sending a letter to the DEA asking them to reschedule cannabis sector shot up, but because of the new House Speaker and his anti-cannabis stance and the lack of progress on safer banking and interest rates rising, we've seen the sector pull back again. And to zooming out, there's the big support zone around 1270. We've got resistance a little bit above 15. And just looking on my regular charts, we've got the 50-day VWAP at 1332. So this is a long-term position for me. I'm going to hang in there, and I like to accumulate below the 50-day VWAP. And we've also got earnings coming out from them in 5 days, with them estimated to deliver 25 cents in earnings. Maybe a little weaker year over year from that issue with Revolutionary Clinics. Hopefully no others. However, like I said, we've been trading sideways ever since we fell to that bottom after the regional banking crisis in March, with a bit of a range between $12 a share and $15 a share. Like I said, just going back to the weekly chart, I've got the net value of all the properties they own is almost at $20 a share. They've only got less than $2 million in debt. They've deployed over $470 million, and the market cap currently is just $272 million at $12.80 a share as I currently speak on Sunday the 5th of November. So technically speaking, you could say we've been in a downtrend up until March this year, where it's kind of stalled out and we're in a sideways market here. There is signs of accumulation here, and we'll be looking for this level to hold. Doesn't mean we can't go lower, especially if interest rates keep going up and we get any negative progress on cannabis legalization. This could still easily trade under $10 a share. However, all things else being equal, if I still see the value, I'll probably keep buying more down there. As my investment objectives with this is to really ride the secular trend of cannabis. No one can predict what's going to happen tomorrow, next week, next month, or even next year. However, I'm highly confident that it's inevitable that cannabis will be fully legalized. Like I said, it's just a matter of when, not if. And I just like the risk reward on NewLake here. I think there's a lot more upside than downside. And I see it as a safer way to play this sector as opposed to the cannabis businesses themselves. I'd rather be a landlord to them and part owner of the property that they sell out of. And I'm looking to stay invested for the long term. Like I said, I think it's going to take a bit of time for this to come to fruition. It could get a lot worse before it gets better. Like I said, we've come off the dark ages in cannabis, 100 years of prohibition. Things are not just going to turn around in a couple of years. It could take a couple more years. Biden may not keep good on his campaign promise. The current House Speaker may be able to have a negative effect on legalization as well. But either way, I'm going to stay invested for the long term. I see it as a good source of passive income. I'm going to continually monitor the business and sector. I may make further buys if I still see the value. I may scale out of the investment, and I'm really looking to eventually realize the full value of NewLake. So I want to only start selling at least above net value and more closer to what my stock fair value indicator's got, which is currently $50, a lot higher than that. And that could very well take a couple of years, but I don't mind having my money invested there in that time, because even if we don't get stock price growth, with that huge dividend, even if they can keep most of it, can still deliver really great returns when you compound it and reinvest. And that's something a lot of people underestimate, is snowballing your dividends, turning it into a compounding machine. And I've just created a couple of examples here to illustrate my point of that. So NewLake pays shareholders a dividend every quarter. And for the last 4 quarters, they've paid out 39 cents per share. So in this spreadsheet here, I've done a hypothetical of 24 quarters, and that's 6 years, which starting from next year, we've got 6 full years before we start the new decade 2030. And hypothetically, if you had 1,000 shares and they kept paying 39 cents a share in dividends each quarter, in other words, if there was zero growth from here for the next 6 years in both the dividends and the stock price, and one just took their quarterly dividend payment, the first one, which would be $390, and reinvested it into buying more shares, the next quarter you'd have 1,030 shares. Then multiplying the quantity by the stock price at $12.80, your investment and grow. And so that's snowballing your dividends, reinvesting in your dividends, creating a compounding machine. And hypothetically, after 6 years, if you reinvested every quarterly dividend payment, an initial investment of $12,800 would turn into $25,500, giving you almost 100% return for a compounded annual growth rate of 12.54%. Now let's take a look if NewLake was able to keep up with what the average expected growth rate of the industry is going to be and achieve 10% growth in both their dividend payments per year and 10% growth in the stock price, and assuming one reinvested all their dividends into acquiring more shares, a $12,800 investment after 6 years would turn into $44,400 for a total return of 247%, coming in at an average compounded growth rate of 19.18. If they are able to do a really good job and deliver average annual growth in dividends of 15%, along with the stock price appreciating on average 15% a year, that initial $12,800 investment would balloon to $56,175 for a total return of 338%, average compounded over 20%. And that just goes to show you the power of reinvesting dividends, along with a company that can also grow its dividends, is a really powerful thing. And that's why those who've done it their whole life are some of the richest people in the world, like Warren Buffett. He's compounded dividends for over 70 years, and that's why in the long run it works just like magic. So even in this no growth scenario, even if the dividend were to go back down to 35 cents, they may have some problems over the coming quarters. Even if we get no growth, I just view it as a compounding machine. Even if that dividend yield goes to 8 or 9%, just compounding that with no growth can lead to really good long-term returns with the potential upside if they are able to grow their dividends and stock price over time. So in summary, why I really like NewLake Capital Partners and I've put 12% of my long-term portfolio into it is because they have competent management, which you're about to see in this interview I'll show after this. They've got a diversified portfolio of properties, 32 across 12 states. They're well positioned in a high growth industry. They've got a strong low debt balance sheet, a solid high paying dividend to compound, and done a really good job at collecting rents in a time when the industry's been going through a lot of hardships. They're currently significantly undervalued in my opinion. There's several potential positive catalysts, including legalization, their share repurchase program, buying back stock, and potential uplisting to the Nasdaq over the coming year or two, which I think creates an astrometrical bet on the upside. So I'm going to remain invested for the long term. And like I said, as part of your purchase with this presentation, I'm going to keep you updated on what I do. I'm going to keep you updated on how NewLake Capital Partners progresses as a business, how the industry progresses, and stay tuned to your emails as I look to send you about an email every month or two, or whenever something important happens in the business or industry, or whether I make a buy or sell to my position and when I finally exit. And like I said, that could still be a couple of years away, and I may just hold on to a core position for the long term. If I keep continuing really liking the business and management and their dividends, I'll see no need to completely exit and realize a big tax bill and have to find something else to put the money in anyway. So just before I go, stay with me. I'm just going to share with you an interview the CEO, Anthony Caniglio, did 10 months ago, where he really articulates well his business, how they're positioned, and what the opportunity is. And just to show you how small the exposure so far is for this business, the video I'm about to show you, it only has 135 views, and I was actually the 4th person to like this video. So still a small stock, but I think therein lies the opportunity. And like I said, I really like how competent and qualified and invested Anthony is in this stock. And as you're about to hear, he knows his business and numbers really well. He's really transparent and is out there promoting the story and his business and is keen to attract institutional investment. Okay, here we go.
Welcome back to The Talking Hedge. I'm Josh Kincaid, capital markets analyst and host of your Cannabis Business Podcast. We are at the Finance Forum, MJ BizCon's pre-show. My guest right now, Anthony Caniglio. He is with NewLake Capital Partners. Anthony, thanks for being with us on The Talking Hedge.
Thank you for having us here today.
I appreciate it. NewLake Capital Partners. What is it? What do you do?
Yeah, we're a REIT. We're a cannabis exclusive REIT. We're one of the largest owners of cannabis real estate in the country today. We are a public company. Our ticker symbol is NLCP. We own 32 properties across 12 states with 13 tenants.
Very cool. Okay. Talk to me a little bit about, I've heard drinking from a fire hose recently with the 2 states that just came on board. There's a lot of interest. I don't want to put that in your words. That's what I heard. Maybe you could tell me, are you seeing a lot more interest in the last week for real estate?
I'd say we've been really busy we're founded over 4 years ago, and it's really been very busy since, but in particular over the last 6 to 9 months, it's been extremely busy. As you know, the cannabis industry is very capital intensive. And with the current valuations that you're seeing in the equity markets and the rates from a debt perspective, our sale-leaseback products tend to be very attractive for operators to be able to raise that non-dilutive capital. So we have a lot of folks that we're in dialogue with looking at transactions all across the spectrum.
Okay. So tell me, explain that a little bit, because some people may not know about sale-leaseback options. The advantage to that is that if you don't have the capital, because you can't go to a bank, right? So if people have equity, rather than going and getting a home equity line of credit on your house, what you're going to do is essentially, and maybe this is a bad example, but like a reverse mortgage, that's a bad example, but you're essentially leasing back that property. You buy it and then you're leasing it back and getting that capital. You probably have a better explanation
Yeah,
than?
that's right. This is a type of transaction that is a very regular way for mainstream companies to manage their real estate capital needs. So companies such as Walgreens or Home Depot, Starbucks, just to name a few, they all utilize sale-leaseback transactions. This is a very non-disruptive transaction. It's more of a financing, but in essence, the owner of the property sells it to us and we can currently lease it back for 15 to 20 years. So you don't have to move out. There's no disruption to the operations. It's really a transaction. We acquire that property and we lease it back.
Okay. And is there differences in that risk tolerance when you guys are doing your due diligence? Do you look at certain regions with a little bit more scrutiny?
Well, it's a very insightful question. Yes, for sure. We focus on limited license jurisdictions, and we've been doing that since the inception of the company in 2019. What we like about focusing on limited license jurisdictions, it's a better operating environment for the tenant. So we look at cash flow at a property level basis. So a better operating environment means better cash flow at the property, these mission critical properties. It also ensures that there's demand for that license. And in these limited license jurisdictions where you typically can't purchase alcohol at a supermarket, that license and the property are typically attached, sometimes legally, but many times just attached in terms of the license is provided to that address.
Mm-hmm. And is there a difference on what the individual is doing with the facility? So a lot of these limited license states like Arizona, for example, are vertically integrated. And so the retail is the same company that is manufacturing and growing. Are you looking at the grow facility different than the retail facility, for example, when doing a sale-leaseback auction on those individual pieces of property?
Absolutely. So we do have 16 dispensaries in our portfolio, as well as having 16 cultivation facilities. If you looked at it based on capital, though, over 90% of our capital is in cultivation facilities because it's a much larger, more capital-intensive building. When we underwrite that, we look at the dynamics, and again, back to cash flow. What kind of cash flow coverage is that dispensary generating? What kind of cash flow coverage is the cultivation facility generating? Is that party wholesale only, or to your point, are they vertically integrated? So when we look at the property, we'll underwrite it as dispensary or cultivation, but then when we underwrite the tenant, we're going to look, are they vertically integrated in the state, and what do their financials look like?
Okay, so you're giving 90% of loans to the grow itself, but it's not separate from the license. So even though you're not necessarily giving the retail a loan, it would be backed by that if something, the collateral would be backed by all of the owner's property?
I'll clarify, it's not a loan. We actually purchase the property.
Okay.
We own it. And so when we look at that company as a tenant, we're underwriting what's the credit quality of the tenant.
Okay.
Will they be in place to pay rent to us over the 15 to 20 year period of the lease?
What is the risk? There doesn't seem like a whole lot of risk involved if that's the case. So yeah, maybe explain the risk tolerance.
So we underwrite three main aspects. We underwrite the real estate, we underwrite the tenant, we underwrite the jurisdiction. And your risk profile is really a mix of those three factors. So when you look at the tenant, what's the risk that management team and that business plan will survive and be durable enough to be able to pay rent over the course of your lease agreement? The licensing jurisdiction, what's the likelihood that the licensing jurisdiction will provide the right operating environment for that tenant to be able to achieve all of their strategic objectives? And then of course we're underwriting the real estate. What's the likelihood that this real estate will be durable over the next 15 to 20 years in the cannabis ecosystem? But we also underwrite if ever it had to come out of a cannabis use and revert to a non-cannabis use. So we're looking at all those factors, and your risk profile is really different depending on who the operator is, where the property is, and what the use of the property is, whether it's cultivation or retail.
A lot of REITs returns are fairly stable. Right now, cannabis is hot. Right now, real estate in certain regions are really hot. Tell me a little bit about your stock price and the reflection of that.
Yeah, so when you look at the performance of our business since the inception of the company, we've collected all of our contractual rent since the inception of the company. So we have industry-leading rent collection, which is really a testament to the underwriting and the ability to generate cash flow for our investors. We've raised our dividend 6 times in a row, 6 quarters in a row. We're paying a cash dividend. Our last dividend was 37 cents a share. And so we're taking those returns that we're generating in the portfolio and delivering them back to the investor. And so when we look at our stock price, we've deployed all of our IPO capital, we've raised the dividend 6 times in a row, and yet our stock price is suffering. And really, I think what we're seeing in our stock price is a sympathy trade with cannabis, but more importantly, it's the lack of institutional demand right now, given the technical factors around prime brokers. Those are the organizations that provide custody to institutions. Many prime brokers pulled out of the industry, supporting the industry in November and December. And so that's taken a lot of the liquidity out. So I speak to a lot of institutional investors that really like our stock, that really like our business model, and really like our portfolio, want to invest, but operationally they're precluded from investing right now. And so we're working hard to try to remedy that. And we think that unlocks a lot of value.
So these still have sin clauses?
It's not so much a sin clause. Many of the prime brokers came out last October, November, December and sent notices to the institutional investors saying that they will not custody shares for a marijuana-related business that's not listed on New York, NASDAQ, or Toronto, or TSX. So if you're able to get through onto one of those exchanges, which we're working hard to do, we're currently listed on the OTC, if we're able to get through to one of those exchanges, it opens up the investor base significantly, improves liquidity, and we think it'll be meaningful for our shareholders.
What's it going to take to do that?
It could come in a number of forms. It could come in the form of regulatory relief or safe harbor and safe banking. I'm not optimistic that actually occurs, but it's a path. It could be safe banking passing as is, and that being the impetus to get the exchanges to say yes. I'm not optimistic we're actually going to see safe banking in the lame duck session. I probably shouldn't say that too loud around these halls. A lot of people will be mad at me. And we've also proposed, we've been publicly telling investors on our quarterly calls that we've proposed a restructuring of our company to be able to comply with the Controlled Substances Act and be able to get an uplisting. So we're not telling people to invest in our stock because that will happen, but it's yet another path that we're pursuing to try to get that uplisting. It's a critically important element for our investors, and quite frankly, management and the board own a fair amount of the company, so it's important to us as well.
Sounds like a value opportunity if you do get that uplisting, and or safe banking comes in, that stock is going to go up because there's so many that are absolutely hammered. Like you mentioned, you're getting just thrown into this cannabis, like with all the other OTC stocks, and there's no differentiation, especially with some solid returns. And so if they're able to differentiate individual cannabis companies, that's an opportunity, as well as I suppose safe banking to come on board and differentiate you guys in that regards as well. So
right, if you look at the discount that we're trading at, it implies distress. And I just told you, we have industry-leading rent collection. You look at our tenants, we have some of the top tenants in the industry, names like Cresco, Trulieve, Columbia Care, also Curaleaf. We have some of the smaller leading players in the cannabis industry, like a C3 Industries or Mint. And so the quality of the portfolio is very, very high, and there really is a disconnect to how we're trading. And therein lies the opportunity for investors, and you get paid a cash dividend on a quarterly basis while you're waiting for that catalyst. So we think it's a fairly attractive prospect.
Okay. So we just had a couple states come on board. Are you looking at any other opportunities, either new emerging markets and or distressed opportunities? Washington State seems incredibly distressed, but it's not vertically integrated. It's not limited license. Are you looking at distressed? Are you looking at new and emerging? What's your focus for 2023 and beyond?
We don't look so much at distressed because, again, we're making a credit and underwriting decision to be able to pay rent for 15 to 20 years. And the execution risk in a distressed situation is typically pretty significant. So that's not likely to be a risk that we would take. Yes, we're looking at opportunities in Minnesota, hopefully Minnesota next year, but in Missouri and in Maryland. We are looking at some of the unlimited license states. As those states mature and as we see some stability, we will see emergence of leaders in those states. And in those jurisdictions where they could actually operate profitably and generate free cash flow from their businesses. And if they can demonstrate that they can do that on a regular basis, that's really what we're looking for, right? That ability to have some stability, the ability to generate some free cash flow in your business, and demonstrate that you're a long-term player here and you're not going to be washed out if there's another leg down in wholesale pricing.
Okay. All right, Anthony, what's your stock symbol? Where can people find you at? Website, all that good stuff.
Yeah, thank you for asking. New Lake, it's newlake.com, NEWLAKE.com. Our ticker symbol is NLCP, New Lake Capital Partners.
All right. I think with that, we're going to have to roll this one up. I want to thank my guest, Anthony Caniglio. He's with New Lake Capital Partners. I'm Josh Kincaid. This is The Talking Head.
And there you have it, guys. As you can see, Anthony is really well-spoken guy and good at articulating his business and numbers. And since he's a large shareholder himself, that gives me a lot of confidence, and I have no problem at all putting my chips behind him and his team, as they have a good track record of executing thus far in what's been a really difficult environment. And I'm excited about the future for New Lake and will stay invested in this for the long run. Okay, there we have it, guys. I hope you enjoyed that presentation I made back in November. And so now I'll give you a fresh update on New Lake Capital stock, the latest results and news from them, the progress we've had in the industry, and some technical analysis on the chart as well. So just a couple of weeks ago, we got their fourth quarter and full year 2023 financial results and came in better than expected. Fourth quarter revenue totaled $13 million, an increase of 6.4% year over year, and full year revenue totaled $47.3 million, an increase of 5% year over year. Pretty good for a REIT considering the environment they've been in and how hard the cannabis industry has been to operate in. Also good for shareholders is the company repurchasing almost 200,000 shares in the fourth quarter, bringing their total shares repurchased to over 908,000 for the 12 months of 2023. The president and CEO, Anthony Caniglio, was very happy with the results, said they have a lot to be proud of and looking forward to the future. Also really good, they collected 100% of their contractual rent during the fourth quarter, so they're not having any current problems with tenants. They're still acquiring additional facilities, investing $350,000 to get an adjacent parcel of land at an existing cultivation facility in Missouri, and also committed to fund approximately $16.2 million to improve existing facilities as listed in this table here. They also closed on a sale of one facility for $2 million that they acquired for $1.9 million, which is really good news, meaning they realized not only fair value what they paid, but actually made a profit on their properties. So the market had been significantly undervaluing New Lake, even based on what they paid for their properties. The company's liquidity is good, debt's still really low, has a revolving credit facility, and what we love as investors is they're increasing their dividends, having just paid out 41 cents per share just on Wednesday, and so that's tracking in the right direction. Still a really good dividend yield of about 8% and growing. And the industry is tracking in the right direction as well. We just recently heard a week ago, Germany, largest economy in Europe, going ahead with full legalization, literally starting tomorrow. Germans are free to grow and possess cannabis with the full backing of their government. And I think that's just shining a light on US political leaders who are a bit behind the ball on this issue, with Vice President Kamala Harris recently acknowledging that as well, saying we need to legalize marijuana, saying it's absurd and unfair that marijuana is treated more seriously than fentanyl under federal law. And she actually said the DEA is working quickly on marijuana rescheduling, which should really open up to full federal legalization, the removal of that real cumbersome 280E tax rule where cannabis companies can't claim expenses as deductions, nor access proper finance, all of which are really positive tailwinds. And at the end of the day, we've already got 74% of Americans living in a legal marijuana state, so it's pretty much already there on the state level. The federal government's the last one to get it done. We've even heard an official statement from President Biden himself saying no one should be in jail for using or possessing marijuana. He wants to get it done. He's trying to convince all his political peers in Congress to get it done before the election, make good on his campaign promise. However, he still has a bit of opposition to this, largely from the big pharma-funded political groups and lobbies who are still putting out propaganda pieces every day, trying to create fear, uncertainty, and doubt in people's minds on this. So it's still not guaranteed to get done. There's still risks here. However, I'd like to think there's a high probability that the DEA will reschedule any day or week now, and that should open the doors for more good things to come. And that's why we've seen cannabis ETFs been ripping higher lately on renewed optimism and outlook for the sector. We can see that namely in the most liquid one, MSOS. And for my regular viewers on my daily market review on this channel, will remember back on the 12th and 13th, I let you know I thought the sector was oversold, looking to have found support. Now is a good time to add to positions because I can see my reversal signals were firing off. Down the bottom near the buy-sell band, the DSI was oversold. The trend strength was negative, showing the market was ranging. It wasn't going into a trend, and the institutional buying percentage indicator was green as well, letting us know that big money was most likely accumulating shares. And since that swing low, we're already up 37%. Going out to the weekly chart, it's looking constructive as well. Look like we've put in a stage 1 accumulation phase, potentially moved into stage 2 advance with a little bit of resistance from late January still in front of us. Switching over to the daily chart of New Lake Capital Partners, it too is looking really good. After consolidating since Christmas, right up until a few days after we got earnings on the 11th of March. Done a nice long pennant formation with a clean breakout on volume. We've got some momentum thrust here. Trend strength's gone back to positive, meaning we've got some momentum in this market. And it too, on the weekly chart, looking constructive. Looks like we've finished that stage 4 decline, done a stage 1 accumulation, which we can see in these big volume thrusts, and we've broken out into stage 2 advance. Still have a little bit of overhead resistance just below $20 a share that we've got to work through. So we could be due a little bit of a short-term pullback here, but we'll be looking for this 1950 level to break out and hold for more good things to come. Looking at my fundamental indicators, still holding up really good. Quant factor scores are okay. Stock fair value currently around $28.50 a share. Shareholder yields actually improved as they buy back more shares, increase their dividend, reducing their debt. 13.63% return to shareholders is really good. Super high business quality score and still a low stock crash risk, even though the stock's up 50% since I first made that presentation in early November. So all in all, things are still looking good here for New Lake Capital Partners, both technically and fundamentally, with a bit of an industry tailwind as well. Of course, no investment is guaranteed. There's always risk. However, I'm still optimistic that the best is yet to come on this one. And so if you'd like to find other highly profitable small stocks like New Lake that are trading well below their intrinsic value, then make sure you watch Module 20 of my online course, Hidden Bargains. That's a 34-minute video where I teach you exactly how to find these stocks that large institutions can't invest in. And you also want to check out Module 10, Valuation Analysis of Stocks, so you understand basic valuation methods and strategies. That's another 35-minute video that'll teach you everything you need to know on how to value stocks, and I keep it all really simple so anybody can understand. Then once you know the strategy, you want to use the TradingView Stock Screener, along with my stock fair value, shareholder yield, business quality score, and stock crash risk indicators to help go through and not only find potential investments, but also to use them as a guide to help keep you in the trade, let you know when to get out, because you can get out when the stock hits fair value, or you could use one of my other custom technical indicators like trend candles as a trailing stop to let you know when to go out whenever the candles go red, meaning the trend's gone down. Or sometimes I like to take half off when the stock hits fair value and trail the other half, and as a way to kind of use fundamental and technical indicators to guide your investment decisions. So this special offer is only available for just a couple more hours today, where you can get lifetime access to my online course teaching you this value investment strategy plus 9 other trading and investing strategies. I also let you know what specific investments I have and dive into other important subjects like wealth management, trading psychology, and risk management. It's a complete A to Z online trading course, along with my 25 custom TradingView indicators. Total value over $1,500. You can get it for a one-time payment of $339 today. No ongoing costs or any other sneaky upsells or anything like that. And you've got 7 days to test it out. If it's not for you, just send me an email and I'll send your money back, no worries at all. However, once you get in there and start the course and use these indicators, you'll be glad you took advantage of this special offer, because it's going to be a long time before I offer them on sale again. So if you're interested in taking advantage of that, click the link below this video, head on over to my website, clickcapital.io, and get access today before it expires. I hope you enjoyed this video, and I'll speak to you again soon. Cheers.